Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, November the 22nd at approximately 9:15 a.m. Pacific Standard Time. It was an interesting week. It was a hard down week last week, and for both the NASDAQ and the S&P, actually for all the markets, but they were wild swings. We had strong upswings followed by strong downswings. And as the market continued to prepare for last Friday's expiration, which was the November monthly expiration, and it was pretty large. And then also, we have to also keep in mind now, what I'm going to try to do here is try to piece this all back together. And yes, I'm going to combine Elliott Wave with Fibonacci and Gamma options trading, which truly was mostly behind what was taking place last week. And so I'm going to start by saying that if we pay attention to what was happening within the SPX, again, the SPX is Big Daddy, the big index of 500 stocks, which has been the anchor for a lot of analysis, for a lot of movement. So in any case, that's where we register and we get a lot of our gamma levels. Yes, they're also provided for the NDX, for the NQ, for the Qs, but we kind of look towards the S&P to see what the majority is happening, what's going on. And so we can start there, but I also can tell you that it occurred in the Qs, it occurred in the spiders, it occurred in the NDX, and it occurred in the NQ, all of those options. But when we're talking about the NASDAQ, the product that actually is going to carry the heaviest weight for me on options trading is going to be the Qs, which again is an ETF based on the NASDAQ 100. So you would think, well, why doesn't the NDX or the NQ trade as heavily as the Qs? I don't know. I don't have an answer for that, but I can tell you that the Qs and the options trade in the Qs are twice as much, if not more, than what happens in the NQ and the NDX combined. So often I'll look over towards the SPX on an index basis as to what's kind of going on there. And there has been a negative gamma atmosphere. So now I want to bring in one other thing into this conversation. When we're looking at gamma, we have a lot of different levels. We have put walls, we have call walls, we have large gamma levels, we have different things. But here's one that's very important, and it's called the volatility trigger. Now, we know that volatility is very big in this whole equation of market movement and how things get priced and what we all blend together. So now also add on to this that what we have so much of is that there's a lot of trading, but we have products now. We have the VIX, which is not, it is basically has options on the VIX, but then we have a future on the VIX, which is the VX. And it has weekly expirations, it has monthly expirations, and it has options. Then we have the VIVX, which is the volatility index on the volatility index. All of them trade very heavily. So they're very important in how things get calculated, in terms of gamma, in terms of just how where these call walls and put walls and everything move in, and how things get hedged and how things get built. So with all of that intricately working around what we're trying to do, it behooves us to understand some of the basics about a volatility trigger. And also another one, it's terminology that actually comes from Brent Kachuba. I believe he put it together, and it's called zero gamma. Now, first of all, volatility trigger. If a market is rising and it goes above the volatility trigger, what's actually happening there is the concept is that we are going from a negative gamma atmosphere to a positive gamma atmosphere by breaking above the volatility trigger and continuing to rally. The hedge or the action for breaking above the volatility trigger and breaking into positive gamma is buying, buy. Now, if we're coming down and we break below the volatility trigger, it flips it from risk on to risk off. Risk off is associated with selling. So we break below a volatility trigger and you wonder, like, oh, that triggered something because here comes all these sell orders and now we're accelerating a little bit. And the reason is because a lot of adjustments had to be made to those positive gamma positions. So that's just basic there. We're just going to leave that out there. So we've been below the volatility trigger in the last couple of weeks. The markets, I think, are very desperately on Friday attempting to get back to them, to get above them. And that's going to play a big part in the analysis I'm going to present, because this could happen as early as tomorrow in the futures market or Monday, just as when we reopen. So we get the cash markets and everything else going at the same time. Now, how does this all fit into what we're seeing? Well, when we're getting the moves that we have getting down, now I'm going to start on, let's take a look at what the big picture continues to tell us in the NASDAQ. So I'm here on the cash market, and the cash market on Friday closed up. Yeah, let me just, I gotta move one thing so I can make reference to closing prices. I can move that over there. The NDX closed up 185 points on Friday. And it started, I believe, at least in the futures market, lower, much lower. It was quite the turn. It was interesting and it didn't stop. But if we really just kind of take a look at kind of what was going on, as the market was dropping, where does the volatility going to go? The volatility increases, but where does the implied volatility go? It goes into the price of the put. Because why? Because they're in demand now, either to cover or just because of the fear index, whatever you want to call it. But puts become more expensive. Well, at the end of yesterday, puts were very expensive. And so without anything to kind of keep them there, in and of itself, simply because of the nature of the hedge, if you're buying puts and you're paying for them, your hedge is to buy the equity, to buy the underlying. So we're seeing this expensive puts across the board and all the underlying stocks, et cetera. So what happens? They got to start buying the stock. And they did. And everything kind of just started to turn and head north. Now, also in that, it was expiration. And so there was a lot of movement towards strike prices that larger traders are just, that's where they want, the market wanted these things to expire. And so that battle was going on. So there was a lot of internal movement, and it was, depending on how you trade or what you trade, it was an extremely good day. Now, let's kind of go over the Elliott. Again, big picture. I'm not going to start on my monthly. I'm going to start here on my 5-year weekly chart. So here we have intermediate wave 3, intermediate wave 4. We are in a primary third wave going up. Inside that primary third wave are going to be 5 waves of intermediate degree, of which here's 3 and 4. So we are in intermediate wave 5. What's going to be inside intermediate wave 5 are 5 waves of minor degree, of which here we have 1, 2, 3, and 4. Minor wave 4 completed in April, on April the 7th of 2025. And so that puts us in minor wave 5 of intermediate wave 5 of primary wave 3. So what's going to be in minor wave 5? 5 waves of minute degree, of which we have 1, 2, and 3. Kind of had to change that a little bit because I was hoping that wave 4 was done and we were heading higher. Now I can bring that down quickly. Let's put it on the daily chart. Now we're inside this minor 5th wave and we have 1, 2, 3. So what I ended up having to do, because of the move, originally I thought that this could be 3 here and we had the 4 there. And this was an expanding diagonal fifth wave ending triangle pattern. That got blown out of the water on that slide. So that got done. And then I moved the third up to here per suggestion of a couple of our members. That they made that suggestion to me. I'm giving them credit back. It was kind of sitting as an alternate for me, and I moved it over after working out the math. And so I have the third there, and we're looking for that fourth wave low, the minute fourth wave low. What this then suggests is that we still have one last minute wave fifth up. So during all of these slides lower, the big question was, is it done? Are we finished? Are we over? Is it going to just start to fall apart? Well, then we had NVIDIA's earnings. And NVIDIA's earnings were pretty powerful. That was here. Then we had Thursday, which we opened up based on NVIDIA's earnings. I'm going to come down to my daily, to my hourly. Here was the gap in the NDX. That's Friday. Didn't take very long. So it's almost like they left an island. And then they started selling. And the selling that was actually coming through at that time was totally gamma based, in my view, because we just started to hit everything. We broke volatility triggers. We broke zero gamma levels. We broke large gamma levels. We broke call walls. We broke put walls eventually. But things got broken leading up to expiration, forcing the adjustment or cover. Again, breaking below a volatility trigger, which happened way up here. What then does that leave us? That the forward momentum is coming from selling. We broke the volatility trigger on the way down. What's the adjusting? Sell. What's the hedge? Sell. So that's what happened. And we just started and it didn't stop. We dropped tremendously in 2 hours. Let me see. This is an hourly. So 1, 2, 3, 4. 4 hours total brought us down. Then we had a rally and then we ended still dropping down. Now, all that aside, what was happening in there was not necessarily attached to I think we heard a lot of talk. This is what was kind of coming over the news wires. You know, that NVIDIA's earnings, yep, they were great, but the AI burst, right? The AI bubble bursting was more on everybody's mind. And or that they were giving credit to, you know, this big drop. Yeah, that may have had something to do with it, but let's talk reality now. If you were watching, what we saw happen was that this may have gone like everybody was happy-go-lucky and we're just going to now keep going up, up, and up. So they made adjustments that they had to turn around and get out of. And then we started to come down. And so it was, again, adjusting and selling based on knocking out all these gamma levels, which are options. So, and we're heading towards an expiry. And so, yeah, there's a lot of change that goes on in there. So do I think that the part of that was like, oh, the AI bubble is bursting? I think maybe, but in all honesty, what I really believe what was behind it was options trading, gamma levels, and getting, you know, just getting the rug pulled out from underneath you. And so we got all the way down there and then they turned it. And then what happened? Well, this was expiration. So this basically was the open. And then they monetized everything they needed to monetize. And then they just started to take it up. Now, did that make the puts any cheaper? Well, yeah, they started to get cheaper. I have to say that. But because they're still pretty expensive and there's still premium in them, because what comes next that's going to keep the price there. And so what happens to that? In the absence of anything to attach to what's going on, it can drive the equity bounce or the bounce in the markets just because they have to hedge, and it's called buying, whatever it is. Now, I want to bring this down. So on an Elliott basis, I've been looking for a minute fourth wave down. Minute wave 4 is going to consist of an ABC of minuet degree. So this originally, I thought, okay, great. Here's an ABC. It's all perfect. It's all perfectly aligned. And I thought, okay, that could be minute wave 4. We get this. Oh, that was all good until Thursday. Thursday, we turned and we started to come down. And you see what it left? 3 waves up. Huge gap, but still 3 waves up. So I had to rearrange, lower the degree of that ABC, and put the minuet wave A at that low on the 18th. And then we had 3 waves up for wave B. So what's that put us in? It puts us in the C wave going down. Now, we can run, and I'm going to start to rebuild here so that you all can kind of watch my process. I'm going to connect. We're looking for the C wave down. And I'm just going to put this in. And I'm doing it together for one, just to show you this is how I put this all together to come up with the levels that I do. And again, the other thing, as I've discussed in the past, I'm really making every attempt to come in and working the math. It's the other thing. If we just go by what the market's really basing everything on, it's mathematics. It's the mathematics of trading. It's the mathematics of Fibonacci. It's the mathematics of Elliott. It's the mathematics of putting volatility together with all of the gamma and everything else. It's all math. If we run the numbers, then we can have, I think, more sustainable or probable levels for what the market's going to get to. If I'm really going to say, if we have a blowout, if something severe happens on over the weekend, like today or tomorrow, and we look at a Monday and we're just like heading to the sewer here, and we're just like dropping like a stone. Maybe something happens on between the Ukraine and Russia. Maybe something happens in somewhere else in the world. Enough to upheaval to create that imbalance in our markets globally. Yeah, sure, that can happen, but not necessarily looking for that type of a scenario. Do I think that we can turn and come back down? Yeah, I do. And I've got the numbers to back it up. So one way I'm thinking now, here on my hourly chart, there's the B. So what, I have to have a C wave and it's got to be 5. What becomes really difficult to try to count, what was this coming down? Because it was just straight down without any upward bias. So I can bring it down to the 15-minute chart, and I can see, well, there's my top. And then we dropped. Where's the first line that I had? A little tiny of an uptick there. And then we came back down and have a little bit larger of an uptick here. So I've come up 2 things. It's either this all can be down to wave 3 of C, and this is wave 4. But it also can be, did we finish this in a way I can say maybe? And let me put one thing in there that would agree. It came down below 0.618. So here we go. If we're looking for that C wave, what are the fib levels that kind of come into play? The first one is equality, where wave C equals wave A. That's the 100% mark. That's down here. What's number 2? 1.618. That's down here. That could complete this. I'm sorry I keep these things up there. They should not be there. They need to be kind of moved here. Actually, let me just remove it. And let me just remove that for right now. So again, first up, equality. That's 23,333 in the cash market. Second, 1.618. It's 22,163 That's in the cash market. The third most common is 0.618. Now, the market did come down, kind of went below it, held, and then rallied back above it. Now, let me just take this 2 off of there. And even if I keep this as a 1, but it also could be a 5, and it also could be a C, and it also could put a 4 underneath it. As difficult as this is on that 15-minute chart, I mean, we can keep walking it down until we can see what actually happened inside of all these bars. But it was wild, it was crazy. So do I then have to assume the possibility that it's 5 waves down and my wave 4 is done, and now we're just going to start to rally again? That is a choice. And that's one that I'm presenting right now. So here do we have? We have on our 15-minute chart, basically what I see is 1, 2, 3, and a 4, but that overlaps that. So kind of on my cash market leaves me with 3 up, which would suggest we're going to get another leg down. Now, not that I want to jump in front of the train, but let's go over and take a look at the NDX. I mean the NQ, excuse me. Here, a little bit different because the futures market trades longer than when the cash is closed. So here we can have the following. I can have 1, 2, 1, 2, 3. I can do it there. 2, 1, 2, 3, 4, 5 of 3, 4, but it overlaps. So unlike the S&P, where I have a clearer choice of it not just being A, B, and a C, where I put the wave 2, but there's a possibility that it's an ongoing 5. So what I can do is go 1, 2, 1, 2, 3, 4, 5 of 3, 4 doesn't overlap. And then we come up in a 5, and then it produces 5 waves. Let me do that again. 1, 2, 1, 2, 3, 4, 5. I know that overlap exists, but I want to bring it down because we may not have any other choice. See the difference? It still overlaps, but 1, 2, 1, 2, 3, 4, 5, 3, 4, and then we get a 5. I'm going to allow it because the market has just been so squirrely. Otherwise, I got to put it in A, B, 1, 2, 3. Again, has to be a 4 because that has to be the C. So no matter how I look at it, it just gets, I can do 1, 2, 1, 2, and then 3, and then a 4, which doesn't overlap. Okay, which means we get a 5th up. Or A, B, 1, 2, 1, 2, 3, 4, and a 5 to put in a C wave. Maybe. So we have a lot of choices to make here, but the NASDAQ is much more outside of what the S&P is presenting. So I think it's going to be very interesting coming into Monday and into the early part of next week, because I have more reason to leave that 2 there. So I'm going to go back over to the NDX. Let's finish this one up and then we'll go over. So here it's not as clear. All right, so we have 1, 2, 3, 4, 5. I can put a 1 there. See that? 1, 2, 3, 4, 5. I can put a 1 there. A, B, C, I can put a 2 there. I'm going over all my possibilities. And now the cash market is telling me one thing that the futures market is not. Which one's going to win? If I base it on the cash, I'm going to say, there's your 4. I got 1, 2, 3, 4, 5 up in the cash. Let's see what happens. Because the only other thing, I mean, it's really rough. If I bring it back out to that hourly, because that's really where we want to look, you get that still kind of there. So you get 1, 2, 3, 4, 5. That doesn't overlap. I still get the 5 in my cash market. So I can put this, change this. I'm leaving it up. I'm actually leaving it as a 1-2 for right now. And giving you, let's look at our possibilities. Now, the possibilities is that we continue to go down. In fact, we go down quick, but only it would be in a 1-2, we're coming down in a third. So what that would suggest, we're going to break this, we're going to break that, we're going to break this quickly. Then we're heading down to these other levels. Or if this is a 1-2 and we're coming down in a third, do we really think we're going to have 3 and 4 and a 5 and it's all going to top and finish out below here? Or are we going to go lower? Yet to be determined. This is the difficulty of where we're at. And part of it is because of that. And that was all based on gamma levels and options trading. And what happened coming into breaking volatility triggers, breaking below put walls, which actually happened down here. So just putting that all together, you get this big adjustment, big change to a lot of positions across the board. Now, one thing I want to mention, it isn't just the indexes that have all those gamma levels and volatility triggers and zero gamma levels, et cetera. So does every last one of the underlying. So does gold, so does silver, so does all the markets. If you trade options, you can derive all these different levels. This is important because it's happening not just collectively here as a representation of the 100 stocks within it. It's happening within the 100 stocks within it as well. It's happening within volatility indexes. It's happening within the VIVX, excuse me. So it's happening everywhere. Why? Because there's options that trade. And options, just because of the way they're constructed, carry a delta, a gamma, a theta, a vega, and a rho. Those are all the different things that can affect your option price, right? The movement in the underlying, right? That's your delta. The gamma is how fast it's going to move or how fast your option is going to move for dollar move in the underlying. So your gamma. So if you're positive or negative gamma and you get that move in the opposite direction against you, right, then you know why if you're breaking a volatility trigger and you have all of this positive gamma, you're going to need to do something about it. Or, just if you're turning into negative gamma, you're going to have to do something about it. Now, going on, theta is just nothing more than the decay. Every day your option is alive and going to the strike, going to that expiration, your implied volatility is going to change, right? So how much premium is going to sit in that option as we get closer to the expiration and you're not in the money, but out of the money or whatever. So there's that. Rho is interest rates or volatility. Novana is volatility. And so what does a change in interest rates do to your position, to those numbers? So that all of those things exist across the board, up and down. So, and the other thing is, I was a market maker for many years. So as an ex-market maker, I know how these numbers can affect your position. And they've just expanded where options trade. So now they're on everything. And so these are real and the movements are real and how they're my point actually here is like if you're a big options trader and you're carrying these big options positions and you have an algorithm that's actually doing the trades, that same algorithm is going to make the adjustments based on what gets broken. Volatility trigger in either direction, a call wall, a put wall, that as things drop, adjustments are made to those positions automatically because it's algo controlled. So that's kind of my point. And because the size of the options market, the number of, we have 0 DTE options. We have every other day expirations. We have a Monday expiration, Wednesday expiration, Friday expiration. We have weekly expirations. We have monthly expirations. We have quarterly expirations. We have just an increase of the how many options are trading, how popular have they become. And so thus the tagline from Spot Gamma, so goes the options, as go the options, so goes the market. I believe that's what their tagline is. But it's true. It's 100% true. As so go the options. That's what's going to happen to the underlying market. And so here we are in one of the underlying markets, which does follow Elliott and does follow the Fibonacci. And what all of that is math. It's mathematics. When we're looking at the relationships between the waves, it's mathematics because we're using Fibonacci. Fibonacci is a numbers sequence. How we come up with these different levels is multiplication. So in doing the Fibonacci sequence, what does it start? It starts at 0. Then we take the next level is 1. Then we add 0 plus 1. That gives us another 1. So it's 0, 1, 1, 2. 0, 1, 1, 2, 3, 5, 8. Then it starts to exponentially just grow. 13, 21, 34, 55, etc. And it keeps going to infinity. That sequence just goes to infinity. The other thing that Elliott did is he started to see these relationships kind of come in here, and he figured that, wow, look at this Fibonacci number sequence. Their commonality is that, well, just like I said, we're looking for a C wave. Okay, what can we compare that C wave to? So over the years, it's kind of come down, wave A and wave C. Sometimes we're in a 5-wave sequence. What do? You'll see me take wave 1, push it up to the bottom of wave 4 to get what are my levels going to be for that 5th wave? Because the relationship is between wave 5 and wave 1. The relationship is between wave C and wave A. The relationship between wave B is to wave A. And there are specific levels that are most common. That's why we come up with 0.382, 0.50, 0.62%. And then if we're in an irregular, say, for example, we're in a little bit where it could be an irregular situation, we have fib numbers that go along with that. Why? Because it's kind of over history. Those are the most common levels. That's what happens. Now, you want to argue the math? I don't know. I don't have time. But they're there and they're real. And I use them. So that's why I'm trying to say I need to stick to the math. I need to stick to the functionality of Elliott. And to add something else, which I have to. So the other thing that I've noticed about Elliott is that there are sometimes there's small changes, sometimes they're glaring changes to how we count because of the algorithms, because of how things are all algorithmically controlled. So one thing that I never saw before was in a wave 2 position that I would get an irregular. So in that example, this is going down. But this could be A, comes down in a B, goes to a new low, and then rises back up and goes to a C level. So it finishes correctly. I can't say that, if it goes down, but it goes, let's just say that this is A and it goes down in a B wave, that the B wave becomes irregular against wave 1, but then it ends doing a C wave back up. So it finishes into the territory that it should be in, but it's still an irregular. I never used to see that in wave 2 position. Irregulars will always be waves within a 4th wave position. So it's a change. So I'm seeing these finite changes that are happening within how I count and what the labeling is going to be because of the changes that we're seeing in options trading, the changes that we're seeing in algorithms being more in control. Or it's actually controlling all of our trading. We all use algorithms, right? It's an algorithm that you feed it into at an execution. I'm trying to enter an order. That's through an algorithm. So again, putting it all together, Stick to the math. And that's what I am attempting to do. I'm trying to stick to the math. So here we are. What are our possibilities? Bringing it back down to that 15-minute chart so we can actually see inside. On the cash market, I got 1, 2, 3, 4, 5. That's a positive. So I should really, if I'm going to play it, put wave 1 up here, not down here. This one, because it's 5 up, unless I want to say A, B, C, right? Other way. This could be A, a little bit of an irregular, and then B, and that's the B, and then a C. Right? So I'm giving you both sides. 1, 2, 3, 4, 5. Or A, B, C. 1, 2, 3, 4, 5, C. So it could be 1, 2. It could be 3, 4, right? Because this is pretty difficult. What all took place in there? That was a very strong, persistent drop. Can I do it 3 waves down? And this is the 4th. And I'm going to come down in the 5th. And I'm going to finish this 4th wave, my new 4th wave. And I'm going to come down to here. All right, so I got to take this. I'm going to leave that there for just a moment. So I have to take this out, and here's our markers. If it's a 3 and a 4, and we're coming down in a 5, or it could, am I only going to get wave 1 out of this? And really what I'm counting on, I can change that, to be honest with you, and just put it in the correct color. So it would be this color. The sub minuet, because I'm looking for a minuet wave C. So the sub 1, and that would be like 2, maybe. Oh, we're looking for a much bigger 3rd wave, a much bigger. And that's the case. We're going to be looking at something like this, right? 23, 114, doing that. Then we rally in a 4. So it lines us up to come down to 1.618. Is it possible? Well, of course it is. To say it isn't is kind of either letting my position talk, if I had one, or not just really looking at all the possibilities. So I have to, and I'm going to present it that way. Now, what did I say before? For all we know, wave 4 is right there. We came through 0.618 and we regained it. And I could possibly go 1, 2, 3, 4, and a 5. I got wave 1. A 1 coming back up. Or I have a wave 4. So both work. What we got to do is wait for the market. If this continues and we come in and they just start selling, this would have to be Monday, because the cash opens again on Monday, and we're just heading down. And it is going to be a 3rd or a 5th, right? If I got to put the 3 here, and which, let's just say, I'm going to put that, I'm going to move this up here, and I'm going to just put this up here and call it the 2. And then I'm going to take this down and call this, because this actually fits better for me, but some others might choose it a little bit differently. And I put this down here and say this is the 3. And then I could say that this is the 4. Now, that would be one way. And then what we're looking for is that wave 5. And then I got to take this over to there. So you see, if I have to do 3 and a 4, see how that 4 overlaps wave 1 massively, which is why I kind of take it out. So as I did. So putting it back, it's either going to be a 3rd, or I'm just going to take it all off, to be honest with you. So I got to leave things open, and either put the 1 there and this is a 2, or put the 4 there and this is working its way into being a clean 5, and we're going to come up and start This is wave two. So it's 1, 2, and we're going to start a third wave up. So here's our choices. Really, we're going to see what happens. It's either going to be there is the completion point for the C wave and the fourth wave. And this is 1 going back up, 2, and we just start by rallying. So we come in on Monday and then we just maybe gap higher and we keep going. Or it is going to be a 1 and this is a 2, and we have a third wave coming down, which did bring us down below here. But let's just say we have, these are our levels of a 3 and a 4 and a 5, and that's more likely than we're just going to drop stronger. Now, choices are going to have to be made again in what's going on all the way around. You know, do we need to start looking at an alternate where that really was the completion point for everything? Not here. That one's gone. But we'd have to move it up, back up to there. And can we? We can. I don't really like that very much, but it's possible. Bring this back down, bring the 4 back over there, and that was the 5th. Now bringing it back down to this guy, which shows a little more data. You know, could you get 5 out of that in the cash market? I can. 1, 2, 3, 4 gaps. It was pretty amazing. That's the exhaustion gap. And so all of that fits to putting the 5 there and all the way up to that primary wave 3. My problem remains, how do you want to count this? So that's where I'd have to go. That's where I'd have to really look to see what is all of this really telling us. And the way I'm labeling it is pretty much what I think the market is telling us. We do have alternates, agreed. But right now, A, B, C, wave A. A, B, C, wave B. We're working a 5. Where we are inside that 5, it really is very difficult to put together right now. So let's see what happens on Monday. What are our choices? That this really was 1 and that was the 2, and we start to decline pretty much from the opening. Or the 4th wave goes there, and this is 1, 2, and we turn and we go back up. Let's take a look at the NQ and see if it does clear any of that up. Not really. So here we are down here. And again, see that? That's why this has to be, again, wrong degree. So let me do it like that and change this to this. Put that. Now this is a downside scenario, folks. Because what happened is I can go right down to that 15-minute. And what happened is we kind of went up. And I do believe it's an AB. Yeah. So I don't like that. But it's an A, B, and then a 1, 2, which does overlap. See, that doesn't work because of that. But I did go here. Then it does. A, B, 1, 2, 3, 4, 5, C, wave 2. Sometimes that's what I have to do. I go to the line chart, which takes all the fluff out because it's on a closing basis. And the prices were wild. They were wild and they were woolly. Either that or it's an A, a B, and a 1, 2, 3, 4, 5, C. So I can do it a couple of ways. See? A, B, no. A, B, 1, 2, 3, 4, 5. So it does work out to be an ABC. Now I can put a 2 there. Or this is a little bit larger, but if I have to go all the way down to there, and I don't like the overlap, but if you just bring it out, I say 1, 2, 1, 2, this 3 overlaps. So again, going to my line chart, 1, 2, 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5 of 3, 4, and we got a 5. Still coming up to complete our first leg up. Okay, those are the choices actually that I'm coming up with right now. Either that's 1, 2, and we're going to fall. And if we're going to, it should be pretty starting tomorrow. When Goldbex reopens, we start to decline. And then here are our levels. And if I had to kind of put this back out to the bar chart, where can we stick this together? If we're looking at it that we're going to start sliding again, you can kind of come down like this. There's where you're looking. Here's your support. But it's going to be at least 100%. Or if this is going to be, all the way down at 3 and this is a 4, it really overlaps everything, which is why I don't use that, because of just how things are lining up. They don't line up correctly. So to me, it's either going to be 1, 2, and we're going to come down heavily in a third, or we're going to put the 4 there and it's going to continue to work its way up. And it's a 1, 2, 1, 2, 1, 2, 3, 4, 5, a 3, a little 4, which kind of overlaps. Not quite, but it's there. So we can't really go down much more. We got to go up. So we're sitting on the fence. We're sitting on the fence. I'm going to leave it as a 1, 2 because we're not out of negative territory yet and gamma level. Now, that brings me to taking a quick overview and a look at as it was left on Friday in the Qs now, which finished at 591 on Friday, almost 592 in the aftermarket. Volatility trigger remains, I think, this is as of the close on Friday, so these are Friday's numbers. In the Qs, the volatility trigger is 601. That's another reason why I'm like, we're that far below the volatility trigger. So either we immediately start to rally because the market needs to get back above that level. S&P's a little bit closer, by the way. But we're going to see. We got to see what's going to happen here. In the NQ itself, volatility trigger is 24,658. Not all that much, considering. So if we got above that, 658, as of Friday, that's where the volatility trigger was. We saw it get blown out on Friday. Or actually, did we? No. Well, yes, earlier. And so it's kind of been sitting there. If they get up there to get above it, it flips it back to positive. It flips it back to our risk on trade. And boy, we'll be off to the races. Because that's what we started to see. They were coming in risk on. They were taking volatility and sending it to the sewer. Right? And the VIX itself, well, they took it off, but it was down. So that's kind of what we got going on in the NASDAQ. Longer term, I'm still looking for the completion point for this fourth wave and for the resumption of a minute fifth wave going up, or just a start of a minute fifth wave going up. The alternate has to be that this completed everything, not here. This did. And there was no diagonal, there was no nothing. It was a straight 5 up. And yeah, it's going to be a tight one, but it would be the alternate. Moving this back, moving that back, moving that out. Just all works. And then I can do, see, this still probably counts best as 5, best as 3. But I got a 1, 2, 1, 2, 3, 4, and a 5. It's tight. It's a very small 5. And it started to write off there. So again, no, it's not easy. But we know what the alternates are. All right, now next week as well, we're supposed to get a lot of, resuming the delivery of all of our levels, all of our stuff. So Monday we have nothing, but also let's think tomorrow, next week is Thanksgiving. So I think it's going to be light volume. I think a lot of traders are going to be with family. They're going to be traveling. They're going to try to get a head start on the traveling. So I think we could be kind of on the slow side, which could work or not work in terms of moving a market. But we have no economic data on Monday. On Tuesday, we have the delayed U.S. retail sales, and we have the delayed producer price index. That's Tuesday. On a thin market, that could really move things around. So we're going to start to get this data. Wednesday, initial jobless claims and durable goods delayed. And then on Friday, we just have, and then Thursday is Thanksgiving. On Friday, I think they still do a half day for business. It's Black Friday. And also, we usually do a half a day. And Chicago Business Barometer comes out on Friday morning. So shortened holiday week, very light, I found on Friday, which could produce a lot of craziness. And we'll see how this all goes. I'm going to finish it there. Again, I'm following the math, paid a lot more attention to this as it relates. Good discussion on what all these gamma levels, what power they do have, and because of the options trading. Our next update will be Monday morning.